So banks are stalling when it comes to post-Brexit plans. Of the 50 banks that have discussed licences allowing them continued access to the EU, only 20 have applied. For more and why, we're joined by Nicholas Comfort, Bloomberg's bank reporter in Frankfurt. Nicholas, is it a surprise that so few banks have applied?
Yeah, I was stunned, frankly, Mark. I mean, for months now, the ECB has been saying this is the deadline, end of June, get your applications in, or we can't guarantee they're going to be processed by the March 2019 Brexit date. And so the fact that so few actually got the paperwork in on time is surprising, I find.
Yeah, I mean, why is that? Why are banks seemingly holding back?
Well, there's a couple of possible reasons. On the one hand, well, I mean, like setting up a unit in Europe is expensive. You have to have compliance people, you have to have back office people. So banks may be watching to see, okay, will we get a transition period? Will the deal we end up with actually mean we can continue operating from the UK and passporting into the European Union somehow? Will that save us the cost to do so? Or maybe some banks are also saying, well, actually, you know what? I don't think I need to be in the European Union, so I'm going to scale back my operations there. There's several possible reasons why. I think it's probably towards the cost question. That's really going to be driving several firms on that point.
Is there any notion, Nick, which banks are looking like they're going to make the deadline or miss the deadline?
Well, like I said, so we know that the 20 did apply on time, and in that group, you don't have to have a crystal ball to assume that the really big banks, the JP Morgans of this world, will be looking at sort of being sure to have applied on time, because for them the cost of setting up a unit in Frankfurt or Dublin or wherever is minimal compared to the loss of having a discontinuation of business with some clients on mainland Europe and in Ireland. So for them it's really it's a simple maths question for them. Where you may have more banks who are more on the fence are the smaller guys in terms of sort of A, can they afford it? B, do they need it? As I said, maybe some banks will be thinking about scaling back. And so I think that's the differentiation we should be looking at.
Are there risks to the banking industry and the broader economic picture from this, Nick?
Well, when you ask the ECB about this point, they're very careful to say that they really don't see any kind of serious disruption for financial stability in the euro area, that cross-border lending, cross-border capital markets business even is not as big as you'd think. For me, I think that's kind of that's their perspective, and maybe in the big picture that is the case. But individual companies will surely be worried about loss of access to financial markets through the UK, because it's not necessarily just the money in London you want to access. It's the global capital markets where the tap, so to speak, is based in London. So that's really more the concern for me on that front. As to if banks don't make the deadline and then somehow get left to hang out to dry, well, a small problem can become a big problem pretty quickly. So I'm not so sure.